The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And checking out where things are right now, we got the S&P up nearly 6 points. We have the Nasdaq up 1 with the Russell up 4.5. The Dow right now is up, 68. Got to get closer in there to make sure I'm seeing that, 68 points. And been a pretty volatile, interesting day to say the least. Looking on over at gold, it is currently down about 18 points. Rallying back after the big move that it had earlier, and but it fell down pretty far, a lot further than it is right now. We'll look at that here in a minute, check that out on the deviations. And then going over, and we'll look at a couple other things. We also got silver right now. It is, decent little move on silver, but copper, down 0.009. We got oil currently down 49 pips. We got corn up 9, along with soybeans up almost 13 points. Euro dollar is up a massive 7 ticks. Pound dollar down 63. Aussie dollar down 82 after lowering their interest rate last night. So we'll look at that and definitely check that out for the news trade setup. How you could have taken advantage of that so you can learn and use that in the future. And let's see here. Looking on over at euro yen down 30 pips. Pound yen flying as usual down $1.13. And we got the USD CAD down 9 pips. US yen down 34, and US franc is up 24 pips on the day right now. And with that, let's go in and check out a couple things that you want to make sure that you've taken advantage of. So right here over on TFNN.com, there is a whole lot for you to check out. And we got, like I said, a few different things for you to take advantage of. One is, click on that Nadex banner, sign up for your demo account. You go on over there, you click our products, and then there's a demo account link. You can fill in username, first name, last name, phone number, email address. Click apply for demo. They'll send you a password in a few seconds, and you can start seeing what all the fuss is about over Nadex and why we like trading it. Also, you can go on in and click on create account, and you can fund an account and start day trading, daytime, nighttime, evening, early morning hours, Asian hours, European hours, whatever. With as little as $100, you can get started. So to fund your account, and you don't have to have like $25,000 like stocks. You don't have to worry about insanely high margins like futures. You don't ever have to worry about margin calls. You don't have to worry about things being put to you or called away from you. Like calls and puts, and you don't got to worry about deliveries and things like that, like on futures and last trade dates and everything. It's very simple, very easy, and it's new, so it'll take a little bit of getting used to. But once you get used to it, you will definitely enjoy it. And so go ahead and click start, get that going, and make sure that if you're in the New England area, if you're going to be in the New England area this weekend, click on over on that on the home to TFNN. We got the Boston Free Live Workshop. Click on that, fill in that form, and the workshop, again, is free. It's sponsored by Nadex. They're giving away over $3,000 in prizes, giving away half-ounce and full, 1-ounce coins. They're giving silver coins. They're giving away subscriptions, books, and a lot more at the event. And what we're going to be doing is we're going to be going through. Dan Cook's going to talk about Nadex, but Tom O'Brien's going to go in and talk about identifying trade setups, things that you can apply to futures, forex, stocks, Nadex, whatever. So all that together, I'm going to go into a little more detail on the binaries, the spreads, and especially the deviation levels. We'll take a short break. We'll come on right back after that. And then Tom's going to go into setting up the trade, putting the pieces together. And then I'm going to go into diagnostic trading, the things that I look at to be one step ahead of the markets. By basically the summary of it is I look at how other traders look at the market on average. What would I do if I was that other trader? And how can I be the guy that is taking advantage of that versus the guy that's getting in at that point? Such as, I know traders at this support line are going to be buying or going to be selling. They're going to be looking for breakouts or bounces, swing trading, whatever. And how often do you say, when it gets here, I'm going to buy, or when it gets here, I'm going to sell? And how often does it actually get there? Very, very often. Okay, like I'd say more often than not, you're right, and it got there. And that's where you start. But then it's like a 50-50 thing once it gets there. And you're ignoring a very simple fact. You're right about it getting there. That's what you actually know. Okay? So that needs to be, your plan needs to be, okay, when it gets to this point, how do I take profits? Not how do I start my trade? How do I trail my stops? So where other traders are starting, that's where you want to be adjusting a position. You want to trade to that level, not necessarily starting at that level. And so that's sort of the heart of diagnostic trading. It's looking at fundamentals, seasonals, technicals, all the different pieces, and statistics like the deviation levels, and, figuring out how to take advantage of it. And then me and Tommy are going to come together talking about risk and money management. And when we're done with that, we're going to announce the winners. Dan Cook's going to be letting you know who's going to be receiving copies of Tommy's books, subscriptions to the Gold Report, subscriptions to the Diagnostic Box Spread Analyzer, the deviation levels, a copy of Timing the Trade, subscriptions to Market Insights, and the Silver Coins. So definitely going to be just a fun event, a good event, but you can ask us in person any questions you have about setting trades up, about binary spreads, about volume, about all sorts of different topics. And we've had great events already. We've had ones in San Francisco, ones in Colorado, ones in Florida. And so now we're going to head on up to the Northeast, and I look forward to meeting a bunch of you in person out there. And so once you've taken advantage of that, check out some of the other stuff we got. We got the free 2-week trial. This is a good time if you're going to be there to sign up for that trial if you have not already. Because you can hop on here, you click on this, get access right now. Watch the basic videos that teach you how spreads work, how binaries work. So that way it won't be the first time you hear the information. And that way you'll have basically more questions that you can ask, more detailed questions. You can get more out of the event. So I definitely recommend checking that out right now. And check out the other things we got going on. We got Larry Pesavento is doing a Trade What You See, Not What You Think webinar, and for subscribers to his newsletter. So definitely check that out. Get more details on our website. And we have the One Boston Fund. And so basically we're doing a promotion right now where if you get your Tiger Dollars, then we're actually going to donate a percentage of that to that fund to be able to help people in Boston from the things that have happened recently. And just try to help some people out. So, not only helps you, but it also allows you to help others. So there's some very cool stuff going on. If you have any questions on any of our shows right now, of course, give us a call. You can reach us at 877-927-6648. Again, that's 877-927-6648. And, we'll be glad to take questions you got about stocks, forex, futures, options, binary, spreads. And I want us to look over something with you. We'll be happy to do it. Just got a question in general about anything from, risk management to position size to, technical analysis. We're here to help you out. And it's a great resource, and it's very awesome. A lot of people take advantage of that and have been very happy with doing so. So we look to, forward to helping you out. And so one of the things I want to talk about is we had the Aussie dollar announcement came out this morning at 12:30. And they lowered their interest rate. So basically followed suit. They've been talking about it. It's been rumoring. Now that Europe did it, they decided to go ahead and join in with the rest of the bunch. And so let me pull that chart on up. We'll look at the Aussie dollar. And we can basically see, can anybody guess when they announced it? So it drops on down, which makes sense considering it is a interest rate lowering, which means people receive less money for holding that currency, therefore there's less desire to hold it, so they sell the Aussie, and that made the Aussie drop. It dropped on down to 1.5 deviations, and about 10 minutes, 15 minutes there, and then it oscillated around between 1.5 and 1 for a while before almost touching on down to 2, and just really sticking to that negative 1.5 deviation. And 2 deviations is 95% of any expected move in a given day. So not surprised that it wasn't able to breach that level. Usually we see it even within just a 1 deviation. But when you have a large announcement like this, then, it should be expected. We can go through. Let's check out a couple of the other currency pairs, and we'll also go through the other news announcements while we're at it. U.S. franc, we'll go ahead and pull that one up next. And they had their foreign currency reserves, came out at 3 a.m., And like I mentioned on the show yesterday, it is a news event. It's a high-impact event, but it usually doesn't have just a massive, immediate impact on the market. It's not really so much of a tradable news event. And when I say tradable, I don't mean like you're going in and buying the spot FX. I'm talking about straddling, where you're buying a Nadex spread, you're selling a Nadex spread, so you can make money if it goes up, you can make money if it goes down, so long as it goes far enough before the expiration of that spread, and your risk is capped no matter what. So, so that announcement, it obviously did have an impact on, their currency, but it took its sweet little time. It moved up to, literally, you can see that right there, 1 deviation before pulling all the way back down to settlement, and then moved on back up, tried to do one more rally, couldn't quite pull it off, and just sitting right around that half deviation level right now. And some other announcements. New Zealand dollar is coming out tonight at 5 o'clock. And let's see what we got coming up tomorrow. So China's going to have their trade balance report. And that is tentative. They don't give the exact time of the release. But what I've learned is you can go in and you can look at the historical releases and get a pretty good idea of when those announcements are going to come out on some of them. So, if you see a pattern, okay? So, like we got 10 p.m., 10:02 p.m., 10:07 p.m., 10 o'clock, so 10:13. So it's scheduled for tomorrow, but it's probably going to be tomorrow night around 10 o'clock in the evening. So that's if history is any guide there, that's your little technical seasonal pattern of when you could expect that announcement to come out. So, don't be fooled when you see it like at the top of the list because it's tentative. It's just there because it's tentative. And like I said, I go back and look at like the ones in April, March, February, January, December. All of them happened right around 10 o'clock in the evening. So that's when we should expect that same announcement. Now, when we do that, we can go in also and look at what other reports. We have U.S. dollar franc CPI coming out. That usually is a decent impact report on the dollar franc. I would not say it's just a rocket, mover as far as the currency for doing a straddle. I'm actually pulling up the Quake Index. It's a pretty cool little tool you can take advantage of. It's called the Olsen scale, and it lets you see basically what currency pairs are most impacted by a given news announcement at any given time on any day. So it's not really so much news focused as just anything. And so we can go over here and literally just pull these up. We can see the dollar franc, having a decent impact. So you might be able to pull off a 1-to-1 on that trade. You might even be going for a lower return on the trade. So, or you might decide to go in and go, you know what, more often than not, it doesn't really explode. Maybe I want to do an iron butterfly. And that's where you go in and you buy a spread for $75, or buy a binary for $75. You sell a binary for $25. And if it stays in the range of those two strikes, sort of like an iron condor, then you can be profitable on the trade. And doesn't have to even stay in it if it'll expire in the range. So it could go out of it if it comes back. And the cool thing is it's a premium collection strategy on a 1-to-1 risk-reward scale. So we have that announcement coming out at 3:15. You could check that one out. I'm usually not big on a lot of the franc announcements. But then we'll go in. We have some other larger announcements happening tomorrow night on the Aussie dollar that could be worth looking into, especially with that change in the interest rate. It should hike up the volatility. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right there, folks. Welcome on back here to the Diagnostic Trading Hour. And right now we're just taking a moment and stepping on through, checking out all the different announcements coming up, what's happening. And tomorrow night we're going to have employment change and unemployment rate both on the Aussie dollar after they lowered their interest rates. So that should add some nice, fresh volatility to that announcement. And it has been, especially the employment change, has been a very, high impact announcement happening at the exact same time, of course, as the unemployment rate, both of those. So it's one that you could definitely look at. Again, it's going to come out at 9:30. That means you're going to have 10 o'clock spreads, and you'll have 11 o'clock spreads that you can trade. You'll also have, pretty much that's it on the spreads. So 10 and 11. And be ready, because right when those 9 o'clocks open up, right when the 10 o'clocks will open up at 8. So you, right about 9 o'clock to 9:15, they're going to increase the implied volatility on those things. So you're probably going to have to be looking to get in somewhere between 8:45 and no later than 9:15 if you're going to get in and straddle the Aussie dollar when that news announcement comes out. Otherwise, there'll be so much premium built in you won't be able to do much with it. But definitely one of the trades for you to check on out. And then we can hop on over. China has their CPI number coming out. And again, they don't tell you when. But all you got to do is look at when do they historically release. And what we can see, 9:40 p.m., 9:30 p.m., let's see, 1:30 a.m., that's out of nowhere, on a Friday. 9:30 p.m., 9:30 p.m. Okay, so more often than not, they're releasing right around 9:30. And so that would be a pair that you could be focusing on. Not obviously not the China, but, impacted markets. You could look at like U.S. yen, things like that. And, so obviously the Japanese market being heavily impacted, but also you're trading the Aussie dollar. They're obviously right there. So that's going to impact their economy. So just doing the Aussie dollar when the China CPI comes out right around the same time, potentially, could help out with the further move in the Aussie dollar if you're doing a straddle on it. Now we can also go down and look at Thursday. On Thursday, we got the Spanish manufacturing production month over month. So that's going to be on the pound dollar. And so that's 4:30 a.m. And then the Spanish 10-year bond auction results are going to come out. And obviously that's highly watched right now. They really had a massive improvement last time, so we'll see if they keep doing well. But looking at these, they usually release the results around 4:45 to 5:45 in the morning on the Spanish bond auction results. So that just sort of helps you out there. And then the pound is going to keep on going. It's got asset purchase facility, and they got their bank rate. Well, after having, I don't think they're going to be cutting their bank rate. I haven't seen a lot on that one. But I don't really see that one in the rumor mill anywhere. But Europe dropped their rate last week. Australia dropped their rate this week. There's just going to be a lot of anticipation built up on just, not only the rate, but the statement. More importantly, the statement that comes out. And to see, why did they leave it? How long are they looking at leaving it? Are they looking at raising it? Are they looking at lowering it? What is their outlook on the economy? How do they justify leaving it where they did? Everything else. And that statement, I'm just trying to see, 8 a.m., 7 a.m., 8 a.m., 7 a.m., 8 a.m. So it looks like 7 or 8 a.m. is usually when that rate statement comes out. So even though the official bank rate for Britain is going to come out at 7, somewhere between 7 and 8 o'clock, they're going to release that statement at at a similar time. And I'm just trying to see if there's any correlation there, but it looks like, okay, they're releasing at the same time as the bank rate comes out, even though they don't give a time. So that's sort of pointless. I'm going back, so that's that 7 and 8 a.m. So it's always, so far, on all the history I'm looking at, the rate and the rate statement come out at the same time. So I don't even know why why they don't put a time on there. But but go ahead and expect that instead of being tentative, is most likely going to be released at the exact same time on the official bank rate with the rate statement. And some report sites are saying rate statement is tentative. But looking at the last 5 or 6 releases, they've come out at the exact same time. So you're probably looking at 7 a.m. rate and rate statement being released at once. We're going in unemployment claims happening out of the U.S. here. So that could be a gold trade. It could be a dollar CAD trade. And it hasn't been a massive impact trade lately. And so, but nevertheless, implied volatility has seemed to, go through the roof. So again, that's when you see that implied volatility with something that's not moving a lot, you might want to turn over and take advantage of, hey, if it's neutral, how can I make money on this trade? So you can make money if it goes both directions. Either direction, you can make money if it stays flat. And so there's more than one way to play the news. One is nothing happens. The other is something does happen. How can you put the two together? And I call that strangling the butterfly. We'll talk about that when we get back from this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading 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 Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit, and on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And so we're just going through the news announcements coming up this week. Quite a bit going on. So we got that pound-dollar bid rate coming out, and just a lot of different things happening. Obviously, we're going to have that came out at the same time. And let me see here, right on. Let me pull that back up. There we go. So I was like, where'd it go? All right. So we have the pound-dollar official bank rate coming out on Thursday. And then unemployment claims, and then there's going to be, after, we had the Aussie dollar, they changed their rate statement, right? Well, now they're going to actually have a whole policy statement come out on Friday or Thursday night. So you're going to be looking for some extra volatility right there in the Aussie dollar. And if we scroll on through, look on over at Friday, so G7 meetings are going to be starting on up. And so basically that's when the 7 industrialized nations, Canada, Italy, France, Germany, Japan, the UK, and the US all come together and meet. They close it to the press, but they hop out and they say things and mess up the market. So just be aware that's going to start happening on Friday. And then Canada's going to be releasing their employment change and their unemployment rate. Right here, looks like it. It's been a pretty high impact, good report. So right there, that comes out at 8:30 on Friday. Just looking at the impact, and it's been a pretty substantial impact. So could be a very solid trade when that is released this Friday. So I'd be looking forward to that one for a potential new straddle. And Bernanke also is going to grace us with his presence at 9:30. He's going to be speaking. Let's see, where is he speaking at? Speaking at the Federal Reserve Bank's 49th Annual Conference on Bank Structure and Competition in Chicago. So, of course, everybody will be trying to read over any word that he says and make something out of it. It's like looking at an artist painting and, what do you see? I don't know. What do you see? You know. So, but anyways, that could cause a little bit of volatility in and of itself. But definitely look for the USD CAD to be moving on that report in the morning when the rate comes out at 8:30. So, one of the things, whether you're trading straddles or not, just knowing that these things are coming out. Dollar CAD report is going to affect the dollar. The dollar is going to affect commodities. So the dollar is going to affect stocks to a certain extent as well. So, just knowing when to expect things to start moving, even if it's not directly correlated to what you're trading, everything in a sense is correlated. And so knowing those high impact announcements, it's just, if you are trading the dollar CAD, well, then you better know that statement's coming out, or, the rate's coming out or whatever. You need to know exactly what is happening because that's the bus coming across the street. And just like your mama taught you when you're a little boy or girl, is to look both ways before you cross the street. Same thing in trading. Know what announcements are coming out that have a high impact on what you're trading that day. Just as much as if you're trading Apple, you might want to be aware of when the earnings announcement's going to come out. I mean, just basic things like that. Whether or not you're trading it based on that, that's tighten stops or don't take entries or have a risk management plan built into place or maybe have a whole strategy like, strangles on binaries or straddles on spreads or something like that to take advantage of the volatility. But, know the intricacies of that and how it works and how to put it all together. Just be aware of it and plan accordingly. So many people just have no idea. They never even have an, they'll go, what made oil move $3? I'm like, well, the inventory report just came in way higher than expected. Trading oil, not knowing when the report's coming out, it's a dangerous thing to do. So, let's see here, and by the way, crude oil inventories comes out just about every single Wednesday at 10:30 a.m. Eastern time. So the only time it doesn't is when you have like a holiday or the market shut down or something like that, then they'll bump it to Thursday or Friday. But most days it's on Wednesday, and natural gas inventories comes out on Thursdays. So on most days on Thursday or most weeks on Thursdays at 10:30 a.m. Eastern time. So just be aware of when those things are taking place. So now that we got that down, let's go ahead and check out a few of the other markets, see what they're doing and how they're moving. We got the euro dollar right here. It moved on up to 0.7 deviation, flew up this morning. I mean, just had just a fast move right out of the gate. And, there wasn't anything major. I mean, German factory orders came in better than expected at 6 o'clock. So I guess that could be the driving factor. It's usually a medium impact report, not one that you would count on to get you a massive movement. But that's really about the only thing that happened right at that time. And but it flew right up to 0.7. It stopped, oscillated, fell back down. And so if you were fortunate enough to be in this trade this morning and it flew up, then you'd use that 10-minute stop deviation method I teach all the time, which is you go right here, the bar that closes above it, you trail your stop, okay? And then whenever the next bar closes above it, you trail your stop on every sequential deviation. And that helps you protect your profits, so when it does fall back down and give all of it back, then you're able to actually lock in some of those profits. And it's one thing to have a risk management plan, it's another thing to have a profit management plan, and you got to have both. So two sides to the same coin, money management, and sometimes we're so focused on risk because we're just trying not to lose that when we are profitable, we have no idea what to do because it's like we have no practice, we have no plan. And so make sure that you do have that plan, you do have that practice, so that way you're trailing your stops. Hey, if I'm making a lot of money, am I just going to take it off because I'm so happy I finally won, or am I going to trail it and let my profits run as far as I can? So if you don't, then you're basically cutting your profits short, and taking all your losses. Well, that's not a winning plan either. So let's see here. We'll go with pound yen. Got some nice movement. We'll hop on down to pound dollar. Pound dollar moved on down a full deviation and really took off this morning right around 10 o'clock. And no major news announcement, scheduled announcement, but it just it went right down there straight to the 1 deviation level. And again, if you're in this and you're doing it, you're just trailing those stops right at those deviations. And we post them if you want to be able to access them. We post them in black and white for you to be able to see every day. Right there in the diagnostic box spread scanner area, there's a deviation level section. And you can go right here, and it literally shows you the deviation levels every day. They update right around 8:30 p.m. for the next day. And we got the spot markets. We got a lot of the futures markets right here listed. And, of course, we also have the Nadex markets as well. And they're based on implied volatility, not based on historical movement, not based on pivot levels and standard deviation, but actual implied volatility. How far should the market move? And that's why they're so spot on day after day after day. And so anyway, so moving that down, I mean, that's a great stop right there. Market moved on back up. You protected it. You let your profits run. And you're able to move it down, a couple times in the process. I mean, you would have moved it down again right. So if you were short before this happened, you could have stopped us right above there. And then, because that bar closed below. And then this bar closed below. So right there. And then this bar closes below right here. So right there. So you were able to move your stop down over and over again. About 80 pips of moving your stop down. So not too bad of a trailing stop method to let your profits run. If you go in, check out the USD CAD, and on the USD CAD, what you can see right here is basically not a whole lot, but a move almost up to half. So you can say at least a third, obviously down a full 0.7. So if you add 0.3, 0.7 together, you get a 1 deviation move from top to bottom. But you can see, man, how it's just hugging that half deviation line. It's just oscillating on it, doing absolutely nothing at the moment. But you see, I mean, it's very helpful. Again, you can move these stops down over and over and over. And let's see here. Let's check out the Franc. How's the Franc doing? We talked about that a little bit earlier, but it moved up perfectly to 1 deviation, pulled on back, and it's oscillating ever since. And our last currency pair will be the USD yen. So over here on the USD yen, and I mean, look at this. I mean, it's just literally playing between half and 0.5. Can you say, scout or swing trading? So I mean, it's just right there. Excellent, perfect moves back and forth, over and over again. And just right today, it's just not super volatile. So other days, it goes a little nuts. So it'll go half deviation, 1 deviation, 1.5 deviations. So, but more often than not, we're expecting, at least a half to a half, or a 0.3 to a 7, or a 1. We're expecting a deviation from top to bottom on most given days. And we can go and look at oil. And by the way, it's very important to have proper expectations of movement. Otherwise, you keep adding into positions when they probably should be dying down. And you don't trail stops when they've really hit what should be probably their maximum point of movement. So you need to have some proper expectations to help you manage your profits and filter entries. So, but right here we got moves between 0.5 and settlement most of the day. It did one little spike right here. It's been about 25-30 minutes between 0.5 and 0.7 before pulling on back up, and been pretty quiet overall. But there's just a big move. Don't get me wrong. That's a $1,000 move. It's just a buck move, but I mean it was this fast, volatile, a bit jerky right there. And then going on in and looking at, we'll check out natural gas. Natural gas has just been in a slight, just a perfect, beautiful downtrend right there. Sweet, beautiful downtrend. So we can see right here, moving on down again, deviation method. So you get your pullback, you get your entry, and so you're in the trade. And so as it's moving down, you got your stop, and then it closes above it, and then back below it, so you can move it again. And then it comes down here, finally closes below it, right over here. Actually, we're still waiting, so we haven't moved it yet. So we're still in on natural gas. We have got a full solid deviation move. And the market's about to wrap up right there on natural gas. And but I mean, that's perfect 1 deviation move. That's where we really expect it to go to. And then right over here we can go in now. Let's check out our metals. So we got gold. And on gold, so what we can do is check out over here. We got to move from settlement down to 0.5, down to 0.7, down to 1, down to 1.5. And you can see at the 0.5, I mean, it oscillated. It spent some time there. It didn't even pay attention to the 0.7 level. Dropped to 1, oscillated, hung out there for about an hour. Dropped to 1.5, just touched it, came back right up to 1, which is where, we expect things to stay within 1 implied, not standard, implied deviation level for the day. And gold is pretty much following suit on that. If we go on down, we can look at silver. So over on silver right here, we can see is a move down again to 1 deviation. I mean, look at that. I mean, just to the tick. Bounces up half, pulls on back down, tries to break it, can't. runs all the way back up to settlement. Looks like a flat market if you're looking at close to close. But all in all, it was a very volatile day and did its expected movement intraday, which is what we care about as intraday traders. And then let's see here. Let's go in now and check out our copper. So on copper right here, we got to move up to 0.7, down to 0.7. So if you think about that, 0.77, that's basically 1.5 deviations overall. But I mean, it flew on down to 0.5, flew on up here, almost hitting 0.7, comes on back down, and all these levels along the way helping you with, expecting basically oscillation at any given level right here. Not really in between. You're not even looking for, you're not even paying attention to the oscillation in between. You're just looking for pivots, oscillation right at these levels. And copper is a bit choppy and wild to trade, so be careful on that. You can trade on Nadex. I'm not a big fan of the spreads for copper on Nadex, but the binaries are great. And we can go over, check out corn. So on corn right here, sort of a quiet day. Usually it's a little more trendy, a little more moving. It did finally, move on up there this morning after the pit opened up, and we got a nice move up to about 0.7. It closed above it, so what would you do on that close above the level? Just like you did here, you'd also trade your stop on up to right here, and you'd be out of corn right now, done with it for the day. And let's see, scrolling on down, checking out soybeans. On soybeans, we got to move up to 1 deviation, down to settlement, back up to 1 deviation. I mean, just respecting that level perfectly. And again, along the way, you could be trailing your stops. There's a lot of things you can do. But just sort of scrolling through the markets and checking out. But they are staying within normal parameters. Nothing new or exciting, just very tradable, which is, I guess, the most exciting. And we got the S&P. It is moving. So it's like, hey, you know what? I'm all about the new highs. Bring them on. And there's nothing in its way. So we had a big volatile morning. I mean, it just flew down, flew back up. It's really only at 0.5 deviation. So it's not so much that it's a massive move. It's that it's an important level. Right, because we're breaking those highs. And it sort of went crazy first thing out of the gate, and not with really any reason to do so, except for the fact that we're at highs. And so the market's just trying to determine, hey, is this the norm? Is this what we're doing? Is there just nothing in our way? And you can see, obviously, a lot of volume right there. Of course, lower volume right here around the lunch hour. And it pulled on back overnight, but decided to get it all back before the market opened up a little bit higher than expected. Came down, filled in a very small gap before taking off, and it just feels like going to infinity and beyond at this point. And we can check out some of the other markets, not all making brand new highs. We got the Russell. It popped on up there, pulled back down, same volatility bars we had, and hasn't been able to actually hit a half deviation level on the day. And we can see right here, okay, it's working on that half deviation, seeing if it can break the highs from this morning, but has not been able to do so. And wrapping on into the Dow. So what's the Dow doing today? Well, it's been sort of the leader in the morning. It didn't just like flop around settlement. It ran up, didn't even close its gap. Out of all the indices, the one that did not close its gap, just ran on up, making new highs, and just pushing for more and more and more. And it just people obviously very excited. A lot of funds buying in, and I was reading that there's more money going in now than there has been in years into the market, and people that were all on the sidelines are putting it all in there. In the last index we got to wrap up, the NASDAQ was really the weakling of the group today. And seeing it staying within half deviations and hasn't done anything significant. But anyway, stay there. We'll be right back after this break.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investor investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And checking out a couple things right now and just looking at it, obviously the S&P is pushing up on these highs. And so I thought I'd bring up something just to show you that can be helpful when you're trading. And it's just reading the DOM. So what you can see right here is we can see the depth right there. So 4294. And, right around 2,500. So between 1620 and 1622. It's going to have to fill all those 1622 orders to break on higher. And so if you had to take profit at 1623, or 1622.5, do you want to be in the front of the line or the back of the line? Okay? Meaning all these other guys got to get cleared out before you are going to get your order filled. And so you want to think about, when I put a sell, it becomes a buy, and how does all that piece work? So a lot of times, if my take profit is right behind a massive level, like 4,300 contracts, which right now is a massive level, then I may want to take my profit before it gets there, okay? Now, let's flip it around. Let's say you were shorting at this level, okay? Well, would you want your stop loss in front of the 4310 or behind it? You want it behind it. You want it above it. Because now if it pops it, now understand it is going to move. You're probably going to lose a little bit more. But the reality is it still has to break through and fill all those orders. And those are the ones you can see. That's not the icebergs and everything else. And of course, somebody can pull those quotes right out of the way. A lot of times they put them up there just to cause those levels. So there's a lot of little games that, of course, can be played. And let's see here what I can pull up for you. Let's just see this right over here. And so we can see a little bit deeper depth. We'll pull up ES. And what we can see is, so we're still seeing the 4,300 right there. Behind it, we're only having a normal order flow. So we're having that, 2,000 contracts over and over again. So just, be aware of that, how that works, put that together. But that 4,300, that's going to be the level it's going to have to try to break through right now. And, so don't be surprised if we see, like we're seeing right now, oscillation sitting at this area for quite a little bit. So, the order flow alone tells you that. Just seeing how many orders exist and knowing that it's going to have to fill all of these in order to do it. And there's plenty of order flow. 2,000 is not a big deal. Even 2,500 isn't massive. But, it's going 4,300, 2,300, 2,400, 2,600. So you're getting some pretty big order flow requirements. And so are there enough, sellers to fill the buyers to fill the sellers, etc.? It's one of the things that a lot of people just don't pay attention to. So whenever you see it. And, also you can be looking at your time and sells and just sort of seeing, what's flowing through, how many contracts. And do you see big order flows, happening at different price levels? So time and sells can be a, helpful indicator as well, just on monitoring order flow and seeing, is there definitely a direction in one price or another or not? And, but no matter what, just understand you're in a battle zone. So now this is an area right here where I like to scalp. And there's a lot of ways to do it, but let me show you just one method on how to do it. So we'll go in here, I'll pull up the box spread scanner. So it's actually using Nadex as a hedge on your scalp. Okay. And I'm going to clear the filters, but I'm going to go for lower risk. And we'll say we're going to buy. So let's say we're going to sell the scalp. I'm going to go for the lowest risk trade I can get on right there. So this one's not too bad. It gets me until 3 o'clock. That gives me about an hour to scalp. If I do 5 contracts, okay, it costs me $100. Basically, I got to get 2 points total to be break even on that. I can go in there. I can sell over and over and over again, going in for like 1 tick, 2 ticks, 3 ticks, 1 tick, 2 tick, 3 ticks on the S&P, but I have a hedge on just so I can't get blown out on the trade. So using the spreads to help you scalp is a very cool way to go in and scalp when you see these definite oscillation zones forming. And we're also at the half deviation mark. Have a great day. I'll see you tomorrow.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.